Hello and welcome to ACCA Global Live Sessions of Management Accounting with me, Natalia Faraday. So what are we going to look at today? We're going to start looking at management accounting. So this is a foundation level for your future studies of particularly management accounting in ACCA. So please make sure that you study the syllabus thoroughly because you're going to learn new terminology here that is still going to be used in your further studies. For example, when you go on to performance management paper or advanced performance management, you're still going to use the same terminology, just with a little bit extras in a little bit more difficult settings. So as I mentioned, my name is Natalia and I'm going to be your tutor throughout your course. And I'm here to keep you company and to make sure that you learn some tricks in order to pass your exam. So it's not just the knowledge, you have to have good exam technique and you need to be able to convert your knowledge into marks in the exam in as most efficient way as possible. So that's what we're going to look at. So what is your exam like? Your exam is 2 hours long and it has 38 compulsory questions. 35 of them are multiple choice or objective testing questions where you have 2 marks each and you either get 2 marks or 0 marks depending whether it's right or wrong. And then this is part A. In part B of the exam you have 3 10-marker questions. These 3 10-marker questions come not on the whole syllabus, but just focusing on a particular area. So it focuses on budgeting, performance management, and variances and variance analysis. So these are the topics that you're expecting to see in part B. Please make sure that you cover the whole syllabus well. We are going to cover the whole syllabus. However, when you're revising, you have to cover it all as well, not just selective parts. When you're answering past exam questions or exam style questions, please make sure that you read the requirement first in order to know what you're answering or what you're expected to see and what details you need from the question, and make sure that you answer the question that is being asked and not the question that you would like to be asked or imagining. Believe it or not, many students do it. Even well-prepared candidates might read the requirement but interpret it in their own way. So double check what is being asked before you finish answering. And if you have any questions about your management accounting studies, please ask. I like you to ask questions and I like you to get in the habit of asking questions. So if you're not sure where some number is coming from or anything else, please ask so you're not puzzled, because I want you to learn and I want you to feel happy and confident with your knowledge. So let's have a look at our plan for today. One moment. So we're going to look at introduction to cost accounting, and we're also going to look at cost classification and behavior. So just before we start, a bit of a note on your exam again. So you have, the pass mark is 50%. So you have your compulsory questions, 38 questions, 50% pass mark. And if you're well prepared, you should be able to solve your exam in well under 2 hours. So use your spare time to check your answers. Don't just answer it and log out. So double check your answers, come back to any difficult ones, and make sure you use your time wisely. Make sure you plan well so that you have enough time to answer all the questions in the exam, and you should be able to. You can take your calculator to the exam hall. So as long as you have a scientific calculator that cannot store text and does not have graphical output, then you should be fine. So standard scientific Casio calculators, not advertising Casio, is just the most common one that you can buy. So you can take it to the exam hall. However, there is scientific calculator on screen as well. So management accounting exams are computer based and you can see them on demand. So any time that you like to sit your exam, you can. The suggested time to sit your exam about 2 weeks after you finish your revision, okay? So please don't don't book it for the day after you finishing your course, because maybe you want to practice a little bit more questions and revise a little bit more before the exam. And don't leave a month or two, go on a long holiday, take a big break from studies, because believe me, you start forgetting some tricks, some techniques, some knowledge. So 2 weeks after finishing the course is the optimum time when to sit your exam. And you can book your exam in any center, and the suggested one is the one that's easier for you to get to, so you don't have to travel for many hours and reduce the possibility of being late. So let's first discuss a little bit management accounting, cost accounting. What is it about? What are we going to cover? So management accounting is concerned, well, we're going to calculate costs of units, or maybe cost of services. Why do we want to know cost of service or cost of some unit that's being manufactured? We want to calculate selling price, and we want to sell product at a profit. So that's what it is about. And now we're going to compare financial and management accounting to see what are the differences between the two. So we're going to look at financial accounting, and management accounting. And first of all, before let's look at that, and then we discuss what is management accounting about. So a financial accounting, or let's say under management accounting, how often would you prepare your accounts? You're probably thinking, right, so we're talking here about basic rules. Remember, if you're a listed company, you have to prepare your statutory accounts at least once a year. For bigger companies, it could be quarterly, but you prepare accounts annually. What about management accounts? When are they prepared? How often? Well, they prepare it as often as required. Is there any guidance on how to prepare management accounts? Well, the answer is the management accounts are prepared in a format that is preferred by management of that particular company. If you work as a management accountant in one company and you move to a different company, they could prepare their reports slightly differently. It's all down to what management wants to see, how detailed, in what format, and so on. So prepared in the format required by management. What about financial accounts? So financial accounts, they're prepared according to strict rules and regulations. You cannot prepare them as you like. What is included in financial accounts? So all of you probably seen a set of financial statements at some point in your life. So what do you have? You mostly have financial information there, wouldn't you agree? So mostly, or primarily financial information. Why primarily financial? Because you'll have your financial statements, so your statement of financial position and income statement. However, you also have notes to accounts, so that's your primarily financial information. For management accounts, well, obviously you have some financial information, let's say variances expressed in currency, let's say dollars. You have some other numbers that could be non-financial information. Let's say if you're managing a coffee shop, a pub, you would want to know how many people are visiting your venue during the hour and what are particularly busy periods. Why? Because you want to make sure that you have enough staff but not too much staff, and you have enough stock, enough products to supply your customers. So primarily financial, and for management accounts it's financial and non-financial information. And what is management accounting about? So management accounting is a process of providing internal information to management in order to help them to run the business efficiently. So management accounting is a process of providing internal information to management in order to help them run the business more efficiently. So this is what it is about. Please remember the key words here are internal information and is provided to management. So these are the key words. Let's have a look at the notes now, and we'll see if we need to add anything to what we discussed. So here are our class notes. In your class notes you have contents page, obviously telling you what is included and all the chapters that we have. We have 13 chapters here. We're going to cover all the chapters with you, so you're going to learn a lot during your studies. We have aim of the paper and main capabilities. What are the main areas of the syllabus? Format of the exam we have discussed, and what we haven't discussed, the approximate weighings of computational versus non-computational questions. Computational usually 60 to 70%, and then 30 to 40% of questions are going to be non-computational, meaning it could be theory, it could be a little bit of discussion. So all questions are compulsory. Then you have some formulae provided to you in the exam, but obviously you need to know how to use them. And for the rest, all other formulae that we come across in management accounting, you have to learn. So make sure you learn pro formas, you learn formally, so you can apply them in the exam easily. Then we have a present value table and annuity tables. We're going to cover them towards the end of our studies. This is to account for time value of money. This is as much as you need to know at the moment. We're going to cover it in detail later. So these formulae and these tables are given to you in the exam. You don't need to memorize these tables. And here is our first chapter, introduction. So we discussed that financial accounts prepare two strict rules, and management adopted to company needs or as managers require, primarily financial and both financial and non-financial, prepared annually for financial accounts and prepared as often as necessary for management. And from definition, well, we know that management accounting is for internal use and financial accounts for external. You know it because, well, financial statements are available to anyone to view. We can add something else here. So here in financial accounting we focus on historical information. So this is past. What happens at the end of the month or at the end of the year, financial accountant sits down and prepares financial statements. So they're only looking at the past, what has happened. What our management accountants look at? We look at the past, but we also look at the future, so we can forecast. That's what we're good at. We're looking at historical plus future. For example, forecasting. How do we do forecasting? Obviously, we don't have a crystal ball. What we're going to do, we're going to look at the past events, see some trends, and hopefully these trends apply in the future, and then we can use this information to try and predict what is going to happen to our best. And now let's discuss data and information. You don't have to copy what I'm writing, but it might help you remember. So it's an easy example. Hopefully you find it fun. So we'll have data and we have information. What is the difference between the two? It could be quite a well, it is quite a popular exam question to distinguish between the two. Data is raw, so it's unprocessed. It could be just random numbers and they don't mean anything. When they're organized in a particular way, everything is nicely labeled, then it becomes information that has some meaning. So you can take raw data, you can process it in order to get information, and this information is going to be used by management to make decisions. And obviously, if information is wrong or incomplete, then management might make wrong decisions. So if you have bad inputs, you probably have bad outputs. So for data, I'll give you an example. So if I write this 4, 2, and 5, does it mean anything to you? Well, probably not. What if I add that this is 4 pounds? Does it mean anything? No, probably not yet. But what if I tell you that 4 pounds is my one-way cost of travel? Cost of travel, one way. Then 2, you might guess, you might not, so probably you're guessing. If I have to travel somewhere one way, let's say I'm coming to work, I probably have to go back home as well, so I'm traveling 2 times a day. So times per day. What is 5? Well, 5 maybe days of the week, or days per week. Sometimes it could be less, sometimes it could be more, sometimes it could be 7 out of 7. However, we'll just use these numbers, and probably some of you have already done something with this number. So what can you calculate from here? You can calculate cost of travel per week. And how do we do that? Well, we just multiply all the numbers. We multiply 4 pounds times 2 ways times 5 days, and it should give you 40. Well, it should be not pounds, should be dollars. We'll swap to dollars soon. So 40 pounds per week. So that's the difference. We had some numbers, we processed them into something meaningful, and now we have some information that could be used for something, maybe for budgeting. And then, so management information has to meet a certain criteria in order to be useful. So we have mnemonic accurate, and then maybe you already know what the letters stand for. However, let's discuss. So first, A is very easy. That stands for, you guessed it right, accurate. We're going to talk here not about management accounting, let's say, but about something simple. Let's say you are in a new town or a new area and you're looking for a direction to maybe train station or cash point, whichever you like. Well, cash point, let's say. So you stop a stranger on the street and you ask, could you help me to find a nearest cash point? The information needs to be accurate. So if they tell you just go that way or go north, you don't know how far you need to go, do you need to turn anywhere, on which side of the road is going to be, what you have to look out, you don't know. So if you don't know, you might not find it. Then information has to be cost beneficial. What does it mean by cost beneficial? Well, you simply want the information to give you more benefit than it costs you. So if you want to get to the cash point and you ask for directions, and the person says, oh yes, I'll give you the directions, but when you get there, can you give me 100, well, let's say dollars, or even $10? You probably don't want to give money to someone for giving you directions. So same if you, let's say a sales department, you might want to purchase some information, some contacts who you potentially might have as customers. So a list of companies or a list of potential clients as individuals with their contact details. You shouldn't pay more for this information than you expect to generate revenue from this information. Then information has to be complete. Well, a bit similar to accurate. If you're asking for directions, you want to get complete directions, otherwise you might get lost and not find what you're looking for. Then it has to be user targeted. So in terms of user targeted, if you were providing information for a director of the company, let's say managing director, they probably do not have time to look at very detailed reports on department by department basis. However, if you were providing information for manager of sales department or maybe manager of production department, they would want to see detailed information about their department because, well, they're concerned with only this particular department. So user targeted, relevant. So it should be relevant for purpose. It should be authoritative. Most of people ask about authoritative. What does it mean? So it derives from word authority, and it means from a reliable source. What is a reliable source? Well, if you're asking for directions to find your cash point, you probably don't want to ask 5-year-old child. No offense to little children, but they might not know where the cash point is. So you want to rely on information that you think is reliable. So authoritative is from reliable source, timely. Well, if you're asking for directions now, you probably don't want to get them tomorrow. You want to have them right now, and easy to use. Easy to use. What is it about? Well, if you're providing a report to your manager, probably it should be labeled nicely. It should give a summary of what it is about, and everything should be labeled nicely so they can easily understand. Anyone with a decent understanding should be able to read and understand your report, whether it's printed, whether it's Excel. It should be easy to use. And what do we use our information for? We use it for planning, decision making, and control. So let's discuss that. So again, we can talk about management accounting. We can talk about you planning to sit your exam. So what is planning about? You're trying to predict what's going to happen in the future and then prepare for it as much as possible. Planning. So trying to predict what is going to happen in the future and preparing for it as much as possible. What could it be? Well, example could be your exam, because this is your future plan. What could be your plan? You already know what is going to be on the exam. You know that it's going to be 2 hours. You know that you're going to get 38 questions and that you need to score only 50 marks to pass the exam. So how would you prepare? You now have the notes and you have the course. You're all ready to start. You started already. You have certain chapters to cover. You have to make sure that you cover all, that you plan time to revise. So it's most likely not enough for you just to listen to the lectures. You should try and study yourself. So once we solve some questions, try doing these questions on your own. Try some questions from the question bank. So you plan your schedule and make sure that you plan into your schedule some rest as well. So you probably have other commitments, maybe other ACCA papers that you're sitting, work, family, friends. So don't forget to socialize and rest. However, have a plan. And then what happens? You can, after a week or so, you can check whether you're following your plan, or maybe you're ahead or maybe you're behind. So then you have to make a decision. Maybe you want to slow down, maybe you want to speed up a little bit and adjust your actuals, so what you're actually doing, and control. Well, you're simply comparing. This is the comparing stage. You're comparing how well you've done according to your plan. So decision making. Let's discuss control first. So comparing actual results to planned, or we'll use management accounting term, I probably guessed right, budgeted. Finding differences. And what are the differences between your actual results and your budgeted results? They are variances. Don't worry, we're going to cover variances later. And then after you find if there are any differences, so take corrective action if required. So you find out whether you're doing well according to your plan or not so well, and then you take a corrective action and see whether you need to speed up your preparation. What kind of decision making can you make under management accounting? Well, it could be either short-term or long-term decisions. You could decide, let's say, you might decide on whether to pay bonuses or not, or you might decide whether you want to take over some company. So this kind of decisions you might make as if you look at management accounting and not exam preparation. And then levels of management. So again, you might get some theory questions on this part, and you need to be aware of the pyramid of our management. So they're all managers, but at different levels. Will work. So first we'll discuss strategic, then tactical, then operational. What is strategic? These are our directors. They are planning long term. So what would you say long term? Well, let's say maybe 5 years or so. Then for tactical, they are managers. And operational, well, it's still management, but this on a smaller scale. So let's say maybe team leaders. So example, team leaders. So operational management would be making decisions on daily basis or weekly basis. Tactical managers would be looking at monthly, maybe quarterly, and directors are going to look at long term, so more than 1 year. They might want to consider what the company is going to be doing in 10 years time, in 5 years time. They don't want to look at day-on-day basis, because that is what operational level is looking at. And we have a little bit of space here, so we can write what it is about. At strategic level, the directors focus on company's future, the information required on ad hoc basis. So what does it mean on ad hoc? So as and when required, they might decide that today we want to make some decision and we want some information. It's not regular, opposite of regular. So information required on ad hoc basis. It's unstructured. And outward facing. What do I mean by outward facing? So the directors of the company are going to be interested in the future of the company, and they also interested what is happening in the market overall, what are competitors doing. So if competitors introducing new products, maybe we should introduce new products as well. If competitor is expanding, let's say overseas, maybe we should do as well, and so on. So they're looking at competition and what is happening in the market. Then tactical managers, so they're concerned with implementing strategy set from above, and effective and efficient use of resources. Information required on regular basis, example monthly. Oops, it's supposed to be monthly, it doesn't quite fit on the screen. Required on a regular basis, example monthly. It is structured and internally focused. Internally focused. And the third one, operational. So these, let's say, team leaders, maybe it's a back office. So what are they interested in? They're interested in running so that the business runs smoothly on daily basis. So if you look, for example, at a college, let's say, look at us, we have to make sure that there are enough studios for all the classes that are happening at the same time. And if the classes are not in studios, then classrooms, that there are enough classrooms, that everything is functioning, that computers are working, and anything that should be available for students, let's say IDs, are prepared in time. So concerned with business running smoothly on daily basis. The information required in real time. Why in real time? Because if, let's say, computer is broken in one classroom, then it should be resolved as soon as possible, so that it can be that the class can take place. So information required in real time, highly numerical, and structured. So this is what kind of information different levels of managers might require. So again, operational level managers would want to make sure that business is running smoothly on a daily basis. Tactical managers are implementing strategy set from the board of directors, and the board of directors are concerned with the future of the business. So what new maybe what new branches to open, what new products to introduce, what are competitors doing. Then you need to be aware about different centers in organizations or different departments. So we're not talking here about maybe a sole trader or a very small company. We are talking about slightly bigger companies where you have different departments. So some departments might be manufacturing, some departments might provide services, some departments might provide services to both manufacturing and let's say they provide services to internal departments and to some other places as well. So first of all, cost center. It is defined as production or service location, a function, an activity, or an item of equipment for which cost can be ascertained. So what does it mean? It's simply something big enough to which you can assign costs. And then when you're producing some units or services, then you take costs from this cost center and allocate them to units or apportion them to units. What could be examples of a cost center? So any of these items could be, let's say you have an industrial printing machine, not a printer that you use at home or in the office, but something like a printer that prints magazines or newspapers. It's going to be quite massive. It's going to require a lot of maintenance, maybe a lot of different parts, would take up a lot of energy as well. All of these costs are going to be collected, assigned to this cost center, this industrial printing machine, and then you can spread the costs over the units that this machine is producing, let's say number of magazines per day or per month. So example could be industrial printing machine, it could also be back office. So what is back office? Let's say an office in the company that it could be an accounts office. So the office that doesn't generate income, but they are there to carry out their work, and they are a cost center because their work is needed. It's not like they're not necessary. However, the company only incurs costs in that department and doesn't usually generate a revenue. Then revenue centers. Oh, and very important point, manager responsible for keeping costs down. Revenue center, the manager is responsible for keeping revenues up. What could be a revenue center? Well, it could be if you're unfortunate enough to go to, let's say, a hospital, usually in a hospital you're going to have a pharmacy. And you can say that the pharmacy in the hospital is a revenue center because they generate revenues. So pharmacy in the hospital. It could be any sales team. So a sales team in a company because they generate revenues as well. Profit center. So manager of profit center is going, let's redo it. A manager keeps costs down and revenues up. So this is center accountable for costs and revenues. What could be a good example? Well, let's say if the manager of a branch of a restaurant or coffee shop or a pub can set their own prices for items on the menu, and if they can set the wages for their staff, then they can be a profit center. So they can keep their costs down, and by paying less for ingredients, paying less to staff, and they can keep their revenues up by setting higher prices. So example, restaurant won't really work for franchise cafes or a cafe that's part of a big chain, because then they have a set menu, and then they have set wages for staff, and they also have set items that they have to have on the menu and set prices. So then it can't be a profit center really. But if the manager has discretion at setting prices and controlling costs, then it's going to be a profit center. Investment center. So this is managed by experienced, people with a lot of experience, senior management, maybe directors. Why? Because they are going to invest funds, and in order for we're not talking about thousands, we are talking here about maybe hundreds of thousands or millions of dollars. So these people should have sufficient experience in order to be able to invest those funds well. So a center which has its performance evaluated by a return on capital employed, which we're going to learn about later, which is called ROS. So investment center managed by senior employees. Example, directors or senior management. So if you look at some chain, it's some company that has lots of chains, let's say a chain of hotels, then each hotel can be maybe a profit center. They generate some profit, hopefully profit, and then they would transfer it to the head office, and the head office would most likely make a decision on how to invest the funds, rather than each individual hotel investing their own profits for return somewhere. And next, now when aware of what all centers are, we need to discuss cost units. So usually a cost unit or measurement of cost unit is the same as in what measure the product is going to be sold. So in this paper, we are often going to talk about production of tables or desks. Why? Because most of you probably still use desks, even regardless whether you're writing by hand or typing, you probably put your laptop or computer or paper on a desk. So everyone can imagine how or what desk is made of, and it's an easy example to cost something. So if we're costing desks, it's going to be, the cost unit is going to be a desk. Let's say if you decided to open a bakery, then the measure could be a muffin or a loaf of bread, so something in what measure you are selling your products. Then if you're selling, if you're a coffee shop, then the measure is going to be a cup of coffee, that's going to be your unit. And if you're selling maybe paint, then you can measure your paint in liters or in cans, or some kind of jar or container that it comes in. So examples, you have petrol per liter, paint per tin, and you have bread per loaf. And then we have sources of information. Again, you might get some theory questions on this part of the syllabus. Quite straightforward, but please make sure that you're aware. So sources of information and also different techniques for sampling. So information can be gathered either from internal sources or external. Internally, while you have management of information, it can be anything. It could be maybe the price of material paid over a period of time. It could be wage increases. It could be some kind of performance of departments. Let's say your efficiency. Efficient performance of departments. And then you have external information. Well, this can be acquired either from some government sites, let's say statistics about inflation, about consumer price index. This can be found on ONS, so National Statistics site. So government statistics. You might get some statistics or some information from professional trade publications. So let's say before you decided to study to become an accountant, maybe you decided to research how much accountants might get paid. So you could find it from an accountancy body who would say that once you get qualification, you might earn X amount, or maybe you can find it from the internet. Let's say some recruitment site would list ranges of salaries for different professions. So internet is also a source. Then you have to be aware of different economic factors. Why? Because they might influence the price. So we have inflation rates. Obviously, if inflation is high, then our prices are going to be rising fast. This might affect the costs that you, so the budget that you're setting for the company, because if you operate in a country that has, let's say, a 50% inflation rate per year, you might want to work it into the budget. Otherwise, your budget is not going to be very useful. Then exchange rates, this is useful if you purchase your materials, let's say, from some other country. Maybe if you're based in the UK and purchasing materials from Europe, so exchange rates would affect how much you pay for the goods. Interest rates, depending on what interest rate you have, it will affect the borrowing of the company. And obviously, if it's cheaper to borrow, then it's easier for company to invest in projects. And if borrowing is more expensive, then it might be difficult for a company to grow. And then employment rates, well, if employment is high, then it's hard to find the suitable workers for a particular position. You would have to pay more. On the other hand, when the unemployment is high, then there are lots of skilled employees and there is a big pool of applicants, and you can get away with paying less. Then sampling techniques. You have to be aware of all of them, and the common exam questions would be you would have a little scenario and you have to say which type of sampling is that. So for random sampling, that's where each item from the population is selected at random. So the key word here, so each item has equal chance of being selected. So each item in the population, meaning they all selected at random. Then you have systematic. This is where the population is arranged in some order, and then you select the first item at random, and all others are selected in some particular interval. Let's say every fifth item or every fifth unit. So then you use constant interval. So make sure you can differentiate different types of sampling. Then you have stratified, so where you can divide your population into stratas. So what are stratas? They're groups, and these groups should not cross over. So let's say if you wanted to look at some statistics, maybe pass rates or pass marks for different age groups for ACCA exams. So you would look at management accounting, you would collect all the pass marks for all the people who sat the exam, and then you can analyze it if you have the appropriate data, how many people from the age group in their 20s, in their 30s, in their 40s passed the exam. Then you could also look, let's say, divide. So remember, those stratas should not cross over. So you cannot get someone who is 25 and falls into a group of 20 to 29 and 30 to 39. So it works like that. It could be based on sex, it could be based on lots of different criteria. Then cluster sampling, it's a shorter version of random sampling. Here you select clusters and then you apply random sampling to a particular cluster. And then you have multi-stage. So you select a small sample of clusters, then clusters divided in further clusters, and then you select random items from the smaller clusters. I read that Australian elections work on this basis. So you select, let's say, different regions, then within these regions you probably select something equivalent to boroughs, and out of boroughs then you select individuals that you would like to collect information from. And then quota, this is a non-random sampling, so be careful. If it's non-random, then it's subject to bias. It's categorized stratified sampling from the categories that are not selected in random. So you simply choose a required number of items from each category. And very key, this is non-random, and there might be some bias. So if you get a question, what type of sampling might cause bias or is subject to bias, this is going to be the quota method. If you get a question which method provides equal opportunity for any member of a population to be chosen at random, or equal opportunity for them to be chosen, then it's going to be random sampling. So it's as easy as that. And on this note, we finished chapter 1, so it's good time to take a little break. So let's take a few minutes and we'll come back at 5 past hour, and we're going to continue with cost classification. So enjoy your break, and I'll see you in a few minutes. We're coming back at 5 minutes past the hour.